This is a review of how to do FIFO, LIFO, and weighted average perpetual inventory system, just like you do in your homework. First, we look at the problem. We see we began with 6, we purchased 29, and we sold 28. So based on that, we should have 7 left over in ending inventory. We also know that they're selling at 195 each. So now I'm going to go through each of the 3 methods. Now first, we began with a balance of 6 at 94. You see that on your top line, July 1st. And the next thing we did is we purchased 15 units. So we bring down the 6, then we do the 15 at the new price, and now we know what's in inventory. So when we make a sale of 18 units, we're going to take, since this is FIFO, it's the first one in is the first one out. So we're going to take 6 at 94 and the balance of the 18 at 97, and that would be 12 because we sold a total of 18 units, and that means we have 3 left over at the 97. Now we purchased another 14 at $100, and we're going to bring down our ending inventory of 3, and then we're going to show the 14, and then we have our sale. 10 units. We have to take the 3 remaining at 97, and we're going to take 7 at 100, and that is going to leave us with 7 units in ending inventory at the most recent price of $100. That is our total. Now, what does this tell us? Our cost of goods sold is going to be $27.19. Our ending inventory is going to be $700. And we add those together and we get the total cost of goods available for sale. Now, always do that check. Cost of goods sold and ending inventory should always equal cost of goods available for sale. Now let's do the same problem based on LIFO. Here again we go. We started with 6. Now we bought our 15, and now we had a sale. Now, because we're using LIFO, the last in is the first out, so we sold a total of 18, so we have to take 15 out at 97 and the remaining 3 at 94. And that gives us 3 at the old price. We bought 14 more. We have 3 left at 94, and now we have 14 at 100. Now we sold 10, but they're going to have to be at the most recent price of $100, which means our ending inventory is going to be made up of 3 units at 94 and 4 units at 100. Now in this example, we end up with cost of goods sold of $27.37, ending inventory at $6.82. And again, always do your check and make sure it equals your total cost of goods available for sale. As a matter of fact, I always do this chart that I show on the bottom, where I show the total units available for sale, which is 35. I also know that I sold 28, which means I've got ending inventory of 7. If I do it correctly, that's what I should end up with. Now let's do weighted average. This one's always a little more complicated because what we have to do is come up with a new price every time we make a sale. So we're going to start with, we bought 15 and now we have 21 units at a total value of $20.19. I'm going to divide the 21 into 2019 and get an average cost of $96.14, which is I'm going to use for the 18 units that I sold. And I'm rounding here. And that leaves me with 3 units at an average cost of $96.14. Now I bought 14 at 100. Now I've got 3 at the average cost of $96.14, and I've got another 14 at $100 each. Now I'm going to have to recalculate the average cost in order to come up with the value for our 10. And they're going to be at $99.29. And that means we have an ending inventory of $695. Cost of goods sold is $27.24. Again, you do your little total there, and that helps you to see what that, make sure you equal 34.19. You always want a check figure. Now our journal entries for FIFO. First, we're going to put it in inventory at what we paid for it. And when we sell it, remember, you always have two sets of entries. It's going to be accounts receivable and sales revenue, which is going to be 18 times the $195 sale price. And for cost of goods sold, we're going to have to add that up to come up with $17.28. And then for our second sale, it's going to be 14 at 100, and then we're going to end up with our two sets of entries with cost of goods sold being $9.91, which we calculated in the previous PowerPoint. Now, what does it look like for LIFO? Well, it's the same accounts, it's just your numbers are different. Okay, that's what that would look like. Now, when we do a comparison, here's how it always will work, and this is another way to make sure you've done it correctly. Weighted average always falls between gross profit and cost, always fall between FIFO and LIFO. And if prices are rising, you're going to get the best net income from FIFO. You'll pay the least taxes with LIFO. So FIFO, best net income, LIFO, less taxes. So now let's look at another problem. Now in this example, prices are going down. So first we do our chart. We start with 25 units. Then we buy 60 units. We add that in at 60. And then we sell, and we're going to sell 25 because those are our oldest units because it's FIFO, 65, and 41 at 60. And that's going to leave us 14 at $60 because we've used up all the ones we had at beginning inventory. Now we're going to buy another 48 at 54. And now we sold another 46. So we're going to take 14 at $60 because that's the ones we have left at the old price. And we're going to take 32 at 54. So in this example, our cost of goods sold total is $66.53 and our ending inventory is $864. And again, you'll always want to make sure you add up your cost of goods sold and ending inventory and make sure it equals your total cost of goods available for sale, which is the $75.17. Also, do that chart that I'm showing you right there at the bottom because that makes sure you've got things to tie to. Now let's do it with LIFO. We've got our units. We're adding them in as we buy them. But the difference is we're going to take our most recent units. And so we're going to take, since we sold 66, we're going to take 55 at the most recent price because that's all we have. We only have 55 units. You can only take as many units as you have at that price. And then we're going to take 11 at the older price, leaving us 14 at the older price. Now we bought another 48 at 54, and now we had a sale of 10. And when we sell the, I'm sorry, 46, and we can take 46 because we out of the 50 at the price of 54 because we had 48 units there. So now what we end up with is 14 at the old price and 2 at 54. And that gives us our total cost of goods sold and our ending inventory. And again, you always want to add them up to make sure they total. Now let's do this one more time, doing weighted average. Again, what you're going to do at the point of sale, you're going to add up your total cost, add up your total units that you have at that point in time, divide the units into the cost to come up with an average price, and that's what you're going to use times the quantity sold. And then you're going to carry that forward based on what you have left over. Now you bought some more units, you're going to come up with a new average price, and that average price is what you're going to use to determine cost of goods sold and ending inventory. And there are your ending numbers. And again, always do your check. Now, if we were going to do journal entries, again, remember you always have 2 sets of entries whenever you have a sale. You've got to take it out of inventory and book the expense and book the sale, and it's either cash or accounts receivable. And when you buy, it's always going to go to inventory because it's perpetual. And that concludes. I hope that helps you with your homework.